Hey everybody, and welcome to another episode of the Payment Strategy Show. I'm Joshua Silver, founder and CEO of Rainforest. We help software platforms embed payment processing into their core product. We help them grow revenue and improve customer retention. I'm here today with Evan DaSilva. He is the SVP of Payments at Bloomerang, which is a vertical software platform for nonprofits. Evan has built and scaled payments at vertical SaaS companies in many different industries, and he's really passionate about helping early stage founders unlock the value of payments. Evan, thanks so much for being on the show.
Yeah, Joshua, thank you for having me.
So to get us started, tell us a little bit about your background. And I always like to ask guests, how did you get into payments?
Yeah, well, I stumbled into it. I've been working in tech and really had experience with small and medium-sized businesses and helping scale platforms for small and medium-sized businesses. I had met some folks at Buildium and they said, hey, we're going to stand up a PayFac, something that we have to learn into, something we're not particularly familiar with. And at that point, I'd hit it off with both the CEO at the time, Michael Montero, as well as the CCO there, Chris Litster. And they said, Evan, we think you have the baseline skill set, analytical, good with partnerships. We'd love to bring you on board to help us figure out how to build a PayFac. I had no idea what I was getting into at the time. I don't know if they fully knew what they were getting into at the time. And we always joke that if we knew what we were getting into, they probably never would have hired me. But it all worked out in the end. So I joined the team at Buildium. We were about $2 billion in GMV at the time, and I helped them register as a PayFac and go in, the process from moving from an ISO into a full PayFac and scaling their payments business to about $10 billion. So it happened a little bit by mistake, but I think as is the case with a lot of folks who end up in payments, I caught the payments bug. Just immediately fascinated by it. There's so much to learn. Every day I still feel like I learned something new in payments, so I caught on to that really quick and just ran with it.
Yeah, it does seem that the vast majority of people just kind of fall into payments. Embedded payments is a relatively new trend over the last number of years. And so, we haven't had generations of heads of payments before. It's a relatively nascent role. Now, Evan, you mentioned you're passionate about helping early stage founders to understand the importance of payments. Tell me a little bit more about that, and why do you think it's such an overlooked area for founders?
Yeah, I think you kind of hit on it a little bit in your, leading into the question, which is there's not a lot of heads of payments. There's not a lot of folks who have experience with it. I've been passionate about it because I've seen so many early stage companies, seed companies, Series A companies, that they're a software company, and I obviously focus in vertical SaaS, and it's just, hey, we're not going to get around to it. We're going to build really great software for nonprofits. We're going to build really great software for property managers, and that payments become secondary. And they don't realize that payments can be fuel for whatever their mission is. And they don't realize how core it is to the customer experience that they have. Then in addition to that, it is a little bit of a opaque space. It's a little scary. There's some complexity to it. You're taking on risk. So folks do what they know best, and they build software, and they tend to leave payments off to the side. But I always feel like they leave so much value on the table. I've seen so many folks come into a Series A or a Series B, and they're looking at funding, and I think to myself, wow, you've left a lot of value on the table, and you've probably slowed your growth along the way by not fueling your mission with payments. My passion for helping folks get started is just from seeing really great founders. I know how hard that is, and how talented you have to be to stand something up. I want to empower those folks, those people, to go build something great. And I think payments is a big part of it. Folks just have trouble taking that first step.
Yeah, and I couldn't agree with you more. I see a lot of times founders say, well, I'll come back, I'll do payments as phase 2, right? I think it's really hard when you have to go back and retrofit and then try to get everybody signed up again. And, people are always, already doing their own thing, versus if you just build it at the beginning. And there's companies, whether it's Rainforest or other payments providers now, that make it really easy to stand up embedded payments. And so if you just can figure out a way to do that as the MVP, as kind of the first phase, you get all of that growth over the years that compounds. So I couldn't agree with you more.
I think that's spot on. And I think what some folks also do is, I think the worst thing that people can do is kind of just chunk off a little bit of it at a time, really small bits. And, I'll set up this ISO relationship and this ISO relationship. And you end up with 3 or 4 different payments providers. You're not really familiar with the terms. And I think you can actually end up really strangling your future growth by not just saying, hey, this is something that we need to tackle that's core to our business, and we're going to do it right the first time by finding a great partner right out of the gate that we can scale with.
Absolutely. You've said that payments can become a major revenue stream. How does that actually work in practice? And what are some of the numbers that you've seen?
I think it typically, right, starts small, which is part of the reason that it always doesn't get the focus it can, is folks don't realize what percentage of the business that it can turn into and what percentage of your growth it can turn into. But, at Buildium, I think it was about 5% of our growth when I got there. And 4 years later, it was 25% of our growth. I'm on a similar trajectory right now at Bloomerang. I think it depends business to business. I think, another Boston, I'm from Boston, a Boston-based business. You look at Toast. I don't even know if Toast is a software company anymore. They're really a payments business with how core it is to what they do. So it just depends how far. I think that, depends what your customer is, the market that you're in. But I think payments can be so great because when I tell the folks at Bloomerang, I'm trying to explain to them, why do we want to get into payments? Back in the day, pricing mechanism started off with, it was your software package, your Windows 95. You go and you buy a box every year and you'd upgrade it. Great. And then you got into SaaS, and SaaS was this big revolution because all of a sudden you're price discriminating more efficiently than you otherwise would with an annual package. And it's great because you're able to deliver value more in line with the pricing. Well, I just see payments as the next evolution of that. And at Bloomerang, we're nonprofit fundraising software. Part of our pricing is on constituent counts. How many constituents do you have is how we price. The more constituents you have, the more your subscription revenue is. Well, That's great, but it's not perfect price discrimination. You can have fewer constituents and raise more money. So if our objective is to help our customers raise more money, if we're priced based on payments, the more that our customers raise, the more we earn, which perfectly aligns our incentives with our customers' incentives. And I think that's when businesses can really take off. So getting into how does it help fuel growth? It helps focus you on what's really important to your customers.
Yeah, I love that, especially the alignment, value-driven pricing as opposed to just arbitrary seats or constituent counts or users or what have you. How do you think payments can shape the overall customer experience? We've talked a lot about revenue, which is clearly super important, but let's talk a little bit about customer experience for a minute.
I love that because I think payments folks can get caught up on it. We've talked about the revenue, and the revenue is great. It's great to fuel the mission and grow your business. But I think first principle has to be what's best for our customer, and payments is really about delivering the best customer experience. And at Buildium, when we decided to become a PayFac, a lot of work behind standing up a full PayFac. I don't know if I would do it again. I haven't done it at Bloomerang. Kept things a little bit simpler. The reasons that we decided to become a PayFac were around the customer experience. It was around onboarding. We had a lot of customers who would go through the onboarding process and then funds would get frozen. And that doesn't work in the business that we're in. We're property managers collecting rent where they then have to pay out to a mortgage. Cash flows are really tight and they need to be sequenced really tightly. So we said, okay, in order to manage this, in order to be able to help our customers truly be set up in one shot without ever having to be on a funding hold, we need to own the onboarding process. So it really started out from us around a specific painful customer experience that we had and saying, okay, we need to make this customer experience as streamlined as possible. But I think that flows through everywhere. Right now at Bloomerang, it's around the donor experience and capturing that donation and having as much control as possible over that experience as well to maximize revenue for our nonprofits, but also ensure that we can get repeat donors, recurring donors, and maximize donation revenue.
Yeah, so it's really important. There's really kind of three stakeholders. There's you, the software platform. There's your merchant or your client, the nonprofit, but then you also have the donor experience. And so I think a lot of times people focus on maybe one or the other, the payer, donor, the person who's making the payment versus the merchant or vice versa. I think it's really important, to focus on both, right? Both groups need to have positive experiences. If you do, payment volume will go up, adoption will go up, your revenue will go up. It's a virtuous cycle.
Yeah, and it's about reducing friction and payments not being felt, right? The less the folks have to think about it. One of the things that I love about payments that really kind of sucked me in is you go into a convenience store, you buy a pack of gum, you tap your card, and in 5 seconds you can walk out of the store. And there's a million things that had to happen behind that in sequence for that to happen seamlessly, and you don't even think about it. And that's what it's about, is just removing all of that friction. Like I said, with the onboarding experience, I want to remove all of that friction in the onboarding experience so my customer doesn't have to think about it. They can just, it's part of signing up for the platform. They can step through it. It takes 5 minutes and they're off and running as quickly as possible. Same thing for the donor. They don't want to have to think about it and enter a bunch of information and watch the pinwheel spin. It's like, nope, it just needs to be as quick as possible. So it's delivering frictionless experiences for customers, for donors. That's what fuels that virtuous cycle.
We've talked about some of the things that you should do, focus on customer experience, value alignment. What are some of the common mistakes, though, that you see early stage companies make when it comes to payments? And also, as a second part of that, when early stage company is entering into a payments partnership, what are some of the red flags, maybe the things to avoid?
This is a great topic to dive into. I think we touched on one a little bit, which is just understanding the contractual obligations as a early stage company for you signing up for a partnership with a payments provider. The biggest thing for me is portability, both around your tokens, your payment methods, as well as your customer data. And I think there's all different flavors of it, but you need to make sure that you're never in a position as a business to be held hostage and tied to one payment provider. Obviously, the landscape is shifting a lot. There's plenty of M&A in the payment space. Won't call it anybody specifically, but I think there's been a lot of shifting in the last few years that folks have seen, and it's okay as orgs are payments processes are moving from one org to another org. You can get held hostage as that happens. So just making sure that you own or at least have access to your customers' data and your tokens so you can move them as you need to. Other thing is just around risk management. And I think there's a few different ways to solve this problem. For me, it was something that I took on and I decided to own. And when Bloomerang hired me, it was one of the reasons that they hired me is I understood risk management. I think it's one of those things that you can also, if you want to outsource it, I know a lot of folks say that's the scary part of it that I don't want to deal with. I always I had to explain to the folks at Bloomerang when I came on board of, hey, we're getting into kind of a PayFac light model where we're owning the risk on the transaction. That risk is asymmetric. At the time, we were $20 million in ARR processing $150 million in payments. It's like, okay, well, our risk is all the payments that we're processing is that $150 million, which is higher than our ARR. So we need to make sure that we have a handle on risk before we jump into this. Yeah, again, you can hire great people who know it and can help you see around corners. You can also find great partners who help you manage that risk as well and price it appropriately. But those are the two things right out of the gate is making sure that you have a plan for that before you jump into the deep end on payments.
Makes total sense. Let's talk now a little bit about the people side of things. You obviously came with a lot of experience. You understood risk. You understood how to stand this up. At what stage do you think a company needs to bring someone in-house specifically to own payments?
That's a great question. I think when you're at the point you're moving, you recognize the opportunity that it can become 20, 30% of your revenue. You need somebody who is solely focused on it and driving it. I think earlier stage, talking about earlier, making sure that you've set up your contracts correctly, you can bring somebody in to advise you. You don't need somebody full-time to review a payments contract. It's when you've said, okay, we want to own this customer experience, which I think folks should own. So it's okay, we've gotten product market fit now. We have software that's scaling and we understand that there's a meaningful payments component to it. That's when I think that you need to bring somebody in from payments to really own it. And it's funny, when I got hired at Buildium, they said, you're never going to have anybody on your staff. It's just going to be you. It's a pure strategy role. Didn't end up being the case. And at Bloomerang, I said, I'll have some folks on my staff, and I have a pretty lean team now. I don't have a lot of folks. I largely operate in a quasi matrix environment. I know matrix can be a dirty word now, but the reality is I think that payments works very well in vertical SaaS businesses with somebody who owns payments, who operates across the business. But I think a really common problem that businesses run into is if nobody owns it, if nobody's in the room, if nobody's in my exec room advocating for payments, it doesn't get done. It doesn't happen. I built out a motion at Bloomerang to migrate our backbook off of older third-party payments providers. The first stab that I took at it was, okay, I'm going to go to market through the AM team. I'm going to have our account manager sell payments. And the reality of it was they weren't compensated on pay. We had a spiff program that we put in place, but it wasn't part of their quota. And so it was something that lived with the AM team. And what would happen is reps, as they were selling payments, they'd get to the 20th day of the month and they finally hit quota. But at that point, payments was too long of a sales cycle. They didn't want to start asking people about payments until they hit their quota. They didn't really care about selling it. So it lived in the AM team with a team that was focused on ARR, and it never happened. We ran this big spiff program for 2 months. We closed 3 payments deals, and they were all coincidental. So, okay, this isn't going to work. What needs to happen now is I need to own it, and then I need to have a motion that I own with folks who are specifically gold incentivized on payments, net payments revenue, to drive that business. And since we've brought people in who are specifically accountable for it, go figure. You incentivize people the right way. Our backbook migration is significantly scaled and has become a very successful motion for us. But there needs to be somebody in the room where I'd sit there and say, fine, I'll try to go to market through the rest of the team. No, it's not going to work. Okay, I'm now accountable to my board. to show results here. And if I'm going to be accountable for my board, I'm going to own it. I've tried to partner with the org. Now I'm going to take a different swing at it. So actually, I had a few different flavors of tactics motions that I tried to work through, through different partners in the organization to make successful, and they didn't work. But unless you have somebody in the seat that says, okay, I'm going to be in the next board meeting and people are going to want to see X amount of volume move from the back book to the front book, it kind of tends to get lost. So I think when you start having measurable goals, you got to have somebody who really owns the number.
Yep. I want to come back to that in a second, but I want to double click on the migration movement that you talked about. So at first you tried to have the account managers just do it as like an upsell kind of off the side of their desk, so to speak. SPIF program didn't really work. What does work? And you've done this a couple times. Like, what is that playbook for? We have hundreds of millions, billions, whatever it is, sitting with backbook. We need to move it. What in your experience actually works? And also, how do you compensate those people? What's the metrics?
Payments is generally a hard space, I think, to operate in. It's complex. I think this is one of the hardest problems, and I've spent a lot of time talking to different folks. So I'll caveat this with, I've seen different things work for different businesses, but ultimately it was a combination of three things that I think that we did. One was product. And that's the foundation for it, of either getting feature parity relative to other processes or other fundraising applications, or better than feature parity, having value-add features that we knew that our competitors didn't have. So having a real carrot for folks to say, hey, this is the benefit of moving to us. We certainly use some pricing mechanisms as well. So there is a stick that said, hey, if you're going to be integrated to us with a third-party processor, there's going to be a cost that we have to maintain the integrations. We have to monitor the integrations. There's a lot of management that goes on with having multiple payments processors or fundraising applications integrated into our application. So there's a cost, and you need to pay freight for that cost. Yep. And then the third piece of it that really worked is standing up this team they are compensated on net payments revenue. It's pretty complex to get to what a net payments revenue number is, because we have customers that might be using multiple fundraising applications or multiple payments processors, but boiling it down to a customer basis, segmenting our customers and saying, okay, this is the segment of customers that are payments priority customers, and this team has first rights. Because we also have an account management motion that's going after ARR, and they have to work in conjunction with account managers to run air traffic control and make sure that they're delivering a good experience to our customer. But it is people who are specifically compensated on, hey, this is the net payments revenue that's going to move over when you win this account. So we gave them the carrots. There's some sticks to help move customers along, but it is really payments focused or fundraising focused, folks with actual expertise around payments. And I think that the other piece of that is, if you're getting into some larger customers and you're talking about bespoke pricing or bespoke contracts, you need to have folks who really understand and can speak payments, and quite frankly, who can do a little bit of math. One of the issues that we ran into is we would have third-party processors say, hey, Bloomerang is more expensive. We'd have to say, okay, prove it. Show me your processing statements. And then we would go and break the entire thing down for them. And we'd say, actually, if you do all the math, we have a very straightforward pricing model at Bloomerang. It is transparent. What you see is what you get. There's not PCI compliance fees. There's not monthly, and everyone does it differently. But for us, we decided to keep it very simple. The cost of that is that oftentimes we look more expensive because our pricing isn't obscuring some costs that are under the hood. So we also needed really talented sales reps who could walk through a processor statement and then translate that and break it down simply to a customer. So once we found the folks to do that and incentivized them correctly, we started winning pretty significantly on the backbook.
Yeah, that's amazing. It's all about education, good sales team going out, doing that apples to apples comparison. Going back now for a minute to the head of payments or head of fintech, whatever title that you want to give them, what kind of profile or background do you think they should have? And then how do you integrate them into the broader leadership team? And do you think that they need to be on the leadership team? Do they need to report directly to the CEO? This is a conversation I've had with several guests over the past couple of months. I'm curious your take.
Sure. I think there's someone who needs to be a generalist. Because you're operating across the business, something that made me a good fit for the role was I've been in sales before. I've been in FP&A before. I've worked in marketing before. So it's okay. I understand all the functions and how they work together. It's not a true P&L center, right? There's only one P&L center at Bloomerang or at Buildium, but we do carve out payments and treat it like a P&L center. So I think it's somebody who can operate across the entire business. And I do think there needs to be some real soft skills, because I don't have direct lines into me. I need to be able to influence people. I need to be able to build business cases. So I actually think my FP&A background has been very valuable for me to say, hey, let me partner with you. And here's all the math to show me how valuable this can be if we partner together on this initiative. So generalist is a big part of it. I do think folks who come up do product tend to have good fits because they can also tend to be able to do the kind of the feature-based analysis and the ROI on how to build out a business. But I do feel, it depends, I guess, the size of the company too. For me, I wouldn't take a seat running payments that wasn't on the ELT, that wasn't on the exec team. I think that you need to be in the room if you're talking about something that, even if it's not at the time, even if it's 5% of the revenue at the time, at some point, if I'm going to own 30% of revenue at the business, I have to have a seat at the table. Yeah. And then there are moments where if there's not that representation, it's just, okay, this is a big growth engine of the company. This is 30% of our revenue. It tends to get lost in, because there's not that history of folks who, end up maybe as a CMO or end up as a chief product officer who came up through payments, right? It's such a new role. It's such a nascent space. That typically folks just don't have the perspective to incorporate it. I think if you had an ELT where everybody had previously been in a payments business, or if you have a business where previous folks had been in a Toast or come out of a Fiserv or a WorldPay or something like that, then I think that there's probably different levels of how you could devolve the responsibility throughout the business. But generally speaking, unless you have a really strong payments background across your ELT, across your executive leadership team, I think that you need to have somebody in seat in that room helping the team make decisions.
Yeah, and that's, I think, an opinion that's shared by the vast majority of people I speak to, is that in this day and age, you really want the head of payments to be call it a GM level role, cross-functional, on the leadership team, visibility, if not reporting directly to the CEO, at least in the orbit of the CEO. I think that's a big shift that I've seen personally in the last, call it, 3 to 5 years. I don't think we had that same conversation on a broad scale 5 years ago. Certainly individuals probably did in advocating for where they should sit, but as an industry, I don't think we've seen that except for within the last couple of years. So it's been an interesting shift. One of the last questions, Evan, to dig into, fast forward, we've implemented payments, everything's going great, it's time for an exit. How does payments impact valuation, and why do you think it's such a big lever for investors or potential acquirers of the business?
Yeah, I mean, most simply TAM expansion, right? It's a whole new addressable market that you have access to. Yep. Certainly super important for net revenue retention. It's going to create stickier customers, for you, which is so impactful to valuation of business. And then I also think it is, we've talked about payments largely, which is where my experience largely lies, but it's a beachhead for a whole bunch of other fintech verticals. I think that once you win in payments, there's going to be adjacent opportunities in lending, issuing, banking as a service. So I think it becomes really enticing about thinking, setting up a PayFac or just moving as a PayFac Lite and meaningfully embedding payments in your application is enough for one hold period. But let's say that you take your Series A, you set up payments, you grow from 5% of revenue to 30% of revenue. It's like, okay, well, what's the next lever that we want to pull with this business to grow it? Payments is a great indicator of, okay, we now understand payments. There's not that big of a jump to move to other adjacencies in fintech to continue growing the business. And I know that I already have a very sticky profile, and I already have folks within the organization who speak fintech and understand how to execute on these plays and other adjacencies.
Yeah, it makes sense. Probably the hardest question I'll ask, because you have so much wisdom over all of these roles in so many years. If you had to distill it just down into one piece of advice that people could walk away with, what would it be?
I think you need to be incredibly intellectually curious. It is an opaque space, and it's evolving so quickly. I always tell my team to pull the thread till they get to the end of it. I think that there's a lot of that is there's so much to discover. And I think that you need to be settling for, okay, that's working. We don't know why that doesn't work. You need to get to the bottom of it. There's a lot of complexities, and being very intellectually curious, very intellectually rigorous, and then surrounding yourself with that is just super important, because there's too many moving pieces in payments to not be willing to tease apart all the different problems to get to the bottom of them. It's too easy to say, okay, it's working as an ISO now. I think that we have a good contract. We don't want to touch that. It's like, well, no. I think we can do better here, and it's going to take a little bit of work. Or, oh, I think that we can manage risk. Oh, that's too scary. We don't want to figure that out. It's like, no, go solve the problem, go tackle it. So in my background, I am entrepreneurial, and part of what I love about payments is that, at Buildium, got to start up my own little business unit inside a larger organization with the backing of a larger company.
Yeah.
Yeah. So, okay, it's great. And then with that entrepreneurial nature, I think comes a natural intellectual curiosity. I think people who have that background tend to do really well in the seat.
Amazing. Good words of wisdom. Thank you so much, Evan DaSilva, for being with us. He is SVP of Payments at Bloomerang. Really appreciate the time.
Thanks, Joshua. It was great to talk to folks.